Okay, so time to call up the first panel. This is about the future and the scale of M&A in the Nordics. So the moderator is Anna Skoglund from Goldman Sachs, head of the Financial and Strategic Investors Group for EMEA. Would you come up? Thank you. So while they're coming up, just an observation and a caveat. Go easy on the panel. Try not to ask them about the level of deal activity, because deal activity correlates with the stock market, and you're effectively asking an M&A banker and the other panelists to call the stock market in effect. So just to kind of temper expectations. Anna, over to you.
Thank you. Well, thank you very much for having me here. I think Fredrik introduced himself as the new guy. I feel like I'm the new lady as well here. It's the first time I speak at this event. I'm delighted to be here. And I'm delighted to be joined by this very large panel. And I think we have more panelists than we have minutes. So we will have to be very to the point. I'm going to let Tobias, why don't you start introducing yourself when we go down the line.
Hi, Tobias Åkermark. I'm responsible for Barclays in the Nordic region.
Jan Olsson, Deutsche Bank. I'm also chairman of the chamber.
Kåll from CapMan.
Nuala Higgins, head of private equity coverage at Carnegie Investment Bank.
I'm Fredrik, Bolander, heading up Lincoln in the Nordics.
Fantastic. So you'll see we have basically representatives for large universal banks, for private equity, from local investment banks, and both large cap and mid cap. So I thought we would start. If you take a step back and think about where we are today in March 2023, and then you think back in the last 3 years in March, we've been in a completely different market every year. So I've been at Goldman Sachs for 27 years. I've seen many ups and downs during that time, but I think I can say that I haven't seen as many swings as in this last 3 years. So March 2020, anyone who lives in the UK know that we were about to go into a major lockdown. And then the activity fell off a cliff, roared back towards the back end of that year. 2021, we had the best year ever in terms of whatever metric you look at. And then February 2022, tragically, we saw the invasion of the Ukraine by Russia. And not only did we see a complete sell-off of the market, we candidly saw a new paradigm of investing. So I thought we were going to start and just think a little bit about your general perspective as you think about that backdrop and this new investment paradigm as it relates to M&A and as it relates to Nordic M&A in particular. So, Jan, I thought we'll start with you because you would have seen as many ups and downs as I have.
I've almost seen as many as you, and I thought 2008 was quite an interesting period too. But right now, I think that the market on the M&A side is strong because there's always a strong M&A market, no matter how the environment affects it. Because right now, share values have gone down on a relative basis, so there are lots of opportunities. And the Nordic market is a very open market, so there are lots of opportunities. Being a banker, I'm a little bit surprised that not more international companies have taken advantage of the Nordic market and the depressed prices, because I know a lot of companies who have looked at certain targets and now the share prices are down maybe 20-30%, and then the krona or the local currencies, because there are obviously a variety of currencies in the Nordic region that are quite depressed, so that makes it even cheaper for strong currency buyers. So I'm a little bit surprised about that. Then I think that the Nordic market is also very open. There are lots of opportunities, and it's an open society basically, so that's what I see. And then the local bank market is very, very strong. So there are 6-7 local, very large banks, and there are many investment banks local that are very strong, that compete in terms of ideas and thoughts. So I would have liked to see a little bit more transactions in this kind of environment. But overall, it's a strong environment, as PitchBook also showed on the M&A side.
Maybe pivoting to you, Nuala, you mentioned a number of local strong investment banks. Carnegie is definitely one of them. What would you add in terms of the kind of dialogues that you're having in boardrooms and corporates, and explaining some of maybe the lack of activity or expecting more activity that we would like to see?
And I'd like to agree with what Jan has said regarding the climate in the Nordics. Though what we are seeing is that buyers are more cautious at the moment, and they are more selective when they're involved in and looking at M&A opportunities right now, and looking for companies that have double-digit growth, double-digit margins, looking for B2B opportunities, companies with recurring revenues. So that is a theme that we're seeing from a buyer perspective. Having said that, I'm touching on what Jan was saying about depressed multiples. We are seeing increased activity and increased conversations on the public to private side. And actually, as you know, Carnegie Investment Bank have been very active on P2P transactions, including CVC's take private of Carry Group, which was completed in September. And we're also advising Altor and Marlin Equity on the acquisition of Meltwater. So that's something that we are seeing increased interest in public opportunities.
Yeah, I mean, I think you see P2Ps across Europe. If you look at our own pipeline, in the sense that definitely in the last 2 to 3 years, and we'll come on to this, the P2P opportunity is probably bigger than it's been in a extremely long time. Now, it's interesting. I thought it was interesting, the PitchBook data here, because the Nordic market has actually been extremely resilient. If you think about what happened with M&A in 2022, global M&A volumes were down 37%. Sponsor M&A volumes were down 35%. If you look at the first 2 months of the year, volumes are down by 60%. So the Nordic market it always fascinates me, because I've seen this when it comes to Nordic IPOs. For some reason, Nordic IPOs always have this sort of special premium. So I'm interested to understand, Tobias, maybe from you, in terms of why is that? You know, how are Nordic companies are they faring better? Are they more insulated from some of the things that we're seeing in the rest of the world? Or how do you explain this resilience in the Nordic M&A market?
It's a good question. I think that Nordic companies generally feel pretty good about where they are at the moment, and sort of coming into this volatile period. I think a lot of companies did a lot of work during the last sort of financial crisis, and come well prepared, and are now looking for continued growth and add additional capabilities. So I think we see, less activity than we would like to see, but there's a lot of dialogue and the companies actively looking to find targets. It's been a little bit tricky also to find sort of a landing ground between buyers and sellers, but I think companies feel good in the region and will continue to be active.
Fredrik, maybe pivoting to you in terms of what you're seeing, and also interested in this reference that Tobias is making to valuation, because I think one of the reasons we were not seeing more activity last year is that there was a disconnect in valuations. So public market valuations adjusted immediately, which is one of the reasons we've been seeing P2Ps, but private market valuations remain pretty stubborn. I'm curious to hear your perspective on that, and whether you think that is about to start adjusting.
I was actually quite surprised seeing the PitchBook, massive drop in valuation, because that's not what we're seeing. I think the valuations that we have sold companies at remains fairly stable. But I think there is a reason for that. I think the reason is basically that the companies that are being sold, there is a herd mentality. So people go after the companies that have the right characteristics, like the recurring revenue or stability, and some other companies that don't have those characteristics, they're kind of unsellable. So they don't factor into the statistics. But that's why I was very surprised of seeing the big drop, because that's not what we're seeing in our transactions.
I think there's a size and sector difference. Absolutely. Because when we are in the lower mid market and there's a lot of industrial and you could say boring buyout companies, their valuations have never gone very much higher. So paying 6.8 times for those has always been the case. But then there's the slightly larger ones. I would agree with you, they haven't dropped.
And Lincoln does a lot of valuations for some of the largest PE houses in the world, where there's a very small change in the valuations within the portfolios. In Q3, Q4, very little change. And the EBITDA growth made up for more than the very small drop in multiples.
Do you see, it's interesting because we are seeing, I do think that if you speak to LPs of private equity, and I'll come on to PI in a moment, I think they are a little bit surprised to see the lack of marks or the timid marks, they would call it. I'm curious to hear just maybe both Jan and Tobias, you can comment on this. How are corporates, one of the things we're hearing from our global corporate clients that they feel like finally we are in an environment where corporates can actually compete with private equity because at least you have more of a level playing field when it comes to cost of capital. Are we hearing that from large corporates in the region?
I definitely think that I mean that's the sentiment, but I'm not sure we've seen sort of the proof of that yet. But I do think a lot of our clients feel that, I mean, there is a window of opportunity right now when there is no real IPO market and the private equity money may be a little bit more on the sidelines. So I think so.
I think first of all, the large corporates, they can finance themselves. It was a record volume in terms of bond financings in January, and I'm talking investment grade. So that's one thing. The other thing is that they don't need as much due diligence as the private equity companies need, because when they acquire a company, they probably know it, or it's a sister company or a similar company, so they can be a little bit more faster in terms of that, in terms of looking at it. So I agree, the large corporates have a slight marginal advantage right now versus the private equity.
And I think you're hearing that across the world. Now, do I think that's going to last, Pia? So what would you say as being the sole private equity voice on the panel?
No, it's good. I agree with you. I still think, actually, if I look at it from two different perspectives, kind of do we see opportunities, and then what do we do in the portfolio to make sure that's going to be exited also in a good way. So I actually think there's a lot of investment opportunities. So we do lower mid-market across asset classes. And I think starting from real estate, which isn't the focus really here, but I think there's a lot of interesting things coming up because there's a lot of portfolios that need refinancing 23 or 24. I don't think all of those refinancings are going to happen, which, if you are well positioned, will create opportunities. Like I said, lower mid-market buyout, that has continued all the time, quite active. Valuations never rose that much, so there's no need for that to take them down, and financing is available. I think when it comes to large buyouts, that's where we exit. Financing is a bit of an issue, but high quality companies will still attract a lot of interest because there is dry powder to go after that, and the strategic corporates are also looking for them. And growth, I think, growth equities. I think valuations have come down for a while because that's forward looking, and you have interest rates eating into the kind of future earnings. But you also have cost of capital suddenly, and maybe a question mark on capital, which means that companies are taking down growth trajectory a little bit and focusing on cash, and that again impacts valuations. But transaction-wise, kind of entry, that's interesting because that creates opportunities. On the current portfolio, and I think actually why we don't see private equity valuations or kind of fair values go down that much, I think it's a volatile market, but actually if you look at end of 22, most sectors performed extremely well, and most companies are still performing very well in the buyout portfolios. There's a lot of industrial, there's a lot of consumer staples, a lot of healthcare. They all performed well throughout 22. So we don't have actually issues yet in the portfolio. But looking ahead, yes, there's a lot that you need to focus on, and say volatile market is a little too vague. So I think it's three things. It's around COVID and Ukraine hit supply chains. So what we look for in new investments and what we do in the portfolio is really end-to-end visibility on your supply chain, and where you have risks, can you build in redundancy so that when there are disruptions, you can still manage. It's energy costs going up and inflation. Well, we're back to basic pricing and sourcing, I mean, the basic playbook. But actually, one CFO told me, I've done this, I've trained the sales guys on price increases. That was 18 years ago. So we have a set of managers who haven't been there. So if you do this really well right now, you can always perform. And then it's cash flow, because cost of capital, maybe lack of financing, that's back, basic playbook as well.
I would like to add one thing there, Pia, what the panel and you say here. And it's amazing how wrong all the analysts and economists have been at the beginning of the year. If you take 2022, their March, it was basically the world is going down. There's conflict in Asia, there's conflict in Russia. Everywhere, and it's inflation, it's hyperinflation and everything else, and valuations will go down. And I'm surprised at the end of the year, what you're saying here and what other panelists and also PitchBook said here, how many deals actually happened and where the stock market, how it performed, and then how we started on the financing side here in January, how well. So my predictions are it will continue to be a strong market in 2023.
And I think stock market indexes are down because they are tilted toward technology and some consumer discretionary that tanked, right?
Yeah. And I don't want to say too much against PitchBook, but never listen too much to analysts. That was a joke. Yeah. That was a joke because I value PitchBook a lot. But gut feeling is very important in M&A too. And because if you analyze too much, like all these people do, then that's true because you have to have a feeling for common sense in business. And when you feel that the transaction is right, please do it and don't think too much, because when you analyze too much, you lose time.
Deal conviction.
When you lose time and the deal goes away. And so often that happens when all these analysts come into a room and they predict this and that, inflation and so on, and it's always wrong.
And we lose fees.
The market is always
That's what you are worried.
There's a lot of frustration building up here, India, about lack of activity.
No, but I get so irritated when all these analysts come in, and I say, you have to feel, if you want to do this, it is the same in real estate or wherever. If you want to buy an apartment or house, do it if you feel it's right. Don't listen to everybody.
But it's not around the companies are going to be there regardless where markets are going, right? So it's around, is the company a good place in the value chain with a good pricing power, good business model, and it's healthy, then it's going to do well, regardless where inflation or energy or something else goes. So then you should do the deal. Yeah.
And I follow Warren Buffett, common sense and compound interest and all that kind of stuff. That makes so much sense, and he's been very successful.
So, pivoting to Nuala maybe around financing, because I do think if you think about things which have structurally changed, cost of capital is one for some time, and it's true that if you go back, I was at a panel about a month ago where Adina Friedman, who's the CEO of NASDAQ, was sitting, and it was interesting to listen to her because we're all sort of since the financial crisis, oh my God, interest rates have gone to 4%. The world is coming down. Like to your point, yeah. Her point was her father was actually a stock picker, and he remembers when interest rates were 7, 8, 9, 10%. So it's not like we never lived in this world before. And it could be a good thing that capital actually has a cost. I'm interested in hearing from your perspective, Nuala, on financing, because speaking for ourselves, we are definitely seeing green shoots. We are open for business. We're underwriting. What are you seeing in the Nordic market? And the Nordic market has always benefited from having very strong local banks, who sometimes, from an American perspective, provides capital too cheaply. So what's your perspective on that?
Well, we've definitely seen that credit committees have been a lot more stringent, that's for sure. And particularly the larger deals have been tougher to raise finance for. Smaller dealers, not so tricky, particularly, small platform investments. So that has been a clear trend. And we have also seen that the larger funds have been doing all equity deals as well, such as Hans Arstad, who was here last year, of course, from KKR. They did the April group take private there, which was an all equity deal. So we're seeing that's definitely has been a trend. But you mentioned green shoots, and that's what we're seeing as well. In our Carnegie-led M&A processes, we had our Nordic M&A call there with the 4 regions yesterday, and it was a really positive discussion around, it's opening up. And that was a really encouraging noise from all of the countries. The banks are opening up. The bond market is opening up. The credit lenders are opening up as well. It is more expensive, but it's there, and that's positive news to all our ears.
Yeah, and I would say, Jan mentioned the investment grade market. That is something which we also saw throughout COVID, which was extremely strong. I would say it's interesting to see how the cost of capital between direct lenders and banks is harmonizing, because at the beginning of 2022, if you remember, the direct lenders were underwriting $1-2 billion tickets at quite cheap levels. I would argue, or I would observe that that is now harmonizing. So actually, we're seeing a more consistent picture on that. I'm going to ask a last few questions to the panel. We already got the prediction from Jan, okay, on the market. So I wanted to do a quick fire round in terms of asking each one of you on how do you think we're going to remember the M&A market in the Nordic region in 2023. I was happy to see that the two biggest deals on that little map, that pitch book did accurately show were Goldman Sachs deals. But I will start with Fredrik. What's your prediction? How are we going to remember the Nordic market in 2023?
I don't think it will be a year that will be remembered for anything particular. I mean, except for what's happening in the world and all of that. I mean, we entered the year with our biggest pipeline ever, even if we disregard hung deals from last year and take that away. So I think in the mid-market, this will be a good year. I mean, it looks very promising. So in our size category, I'm very, very hopeful.
Best year ever for Lincoln.
Hopefully.
That's your prediction. I can hear that. Nuala.
I think this will be a good year for the private equity. It'll be a very good vintage, in my view.
Excellent.
I mean, just to add one thing more. I mean, obviously we are benefiting because we don't do IPOs.
Yeah.
So we are obviously benefiting as well from that the M&A route becomes the main exit route for private equity right now.
PE, yeah.
Nuala basically took my point, but
I'm sorry.
but then we agree on it because I think this will be this and the years around this one that will be really good private equity vintages.
Excellent. Jan, you've given your prediction.
Yes, but I want to make one more prediction. I think the small currencies in the Nordic region are a disadvantage for M&A because they will be under pressure, continue to be under pressure. And I'm in favor of adopting sort of a different climate there, whatever that is. It could be different currency or because it will be a problem in the future if you want to acquire internationally.
Good to be a Finn.
Yes, exactly. You took that step. And I think in terms of M&A, because if you're small countries with huge companies, that's what the Nordic region are. So 95% of products are sold in the international market. And it's always a complication to sort of go back to the home country and have the AGMs there and everything else, the annual report and so on, and the accounting and the financials. And I think it would be easier in terms of M&A at least, and possibly financing too in the future.
To basically swap currencies.
Yeah.
It's interesting. We are seeing one of the trends we are seeing globally right now is relistings, actually from the UK market into the US market, but actually broadly European exchanges. And I think as a region that is concerning.
It is very concerning. I agree.
And I hope we're going to see that stabilize and reverse. I'll come back to it in a second. But Tobias, what's your prediction?
No, but I'm a little bit more bullish than Jan in terms of the Nordic region. But I think this may be the year that where we see some of our corporates taking a more active step and doing some more transformation than M&A. We've seen. I mean, there's been a lot of discussion around that, but I think both boards and management teams are ready to take that step, and whether that's 23 or 24, let's see. But my prediction is that will happen in the near future.
I'm not negative on the Nordic region. I'm always an optimist. Just to make that very clear, I was just on the currencies. It would make it much easier, and we would see even more deals. That was my point.
It is interesting. We have this phenomenon also. Actually, if you just look at one ratio, which is always interesting, we talked about P2Ps earlier, is to look at the local stock exchange market and then see what is the percentage of revenues outside that market. So that's exactly what you're referring. Actually, the UK and Scandinavia have the highest proportion of large companies versus the size of their local market.
Yeah.
The UK is trading at a significant discount to the Nordic market, though. So let's see if the Americans come.
Yeah. The Netherlands would be up there too.
Exactly, 100%. Absolutely. They do benefit from the euro, though, to your point. We're going to finish there. Are we going to take any questions? Yes? Okay, good. Yeah, I'm looking at this clock here. Any questions from the audience?
Question.
what people are thinking. I think it's a very interesting point about herding and companies following. If you look across M&A waves, across history, companies follow each other. These are big strategic moves. You do not want your closest competitor moving and then you don't move in a strategic direction. So that I thought was quite an interesting point. And then obviously green shoots, great to hear. One other thing wasn't really mentioned, but it's implicit, is if you're a CEO, okay, and you're seeing this volatility, whether it's volatility in rates, volatility in the product markets, volatility in your input prices, you have an option. You don't need to do the deal just yet. There's a huge volatility means the option to wait is high. So why not wait?
So this is exactly against what Jan is saying. He's saying, do not wait.
Sorry. Okay, so any questions for the panel? Take your advantage here.
All right.
We were very clear.
Yeah, we exhausted.
Okay, well, thank you, panel. It was a great discussion.